Good morning. There's the opening bell, and that means it's time to welcome everybody out to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Barb Armstrong, also an education coach and senior manager here, 20-plus year veteran of the financial markets, a good friend and a great educator. She's there to help facilitate the conversation and answer your questions along the way. So I would encourage you, since all of you are here, welcome to all of you. I would encourage you to be a part of that conversation. If you are watching this in the recorded version, leave us a comment. We'll get back to you as quickly as we can. We're going to get right into the market this morning. There's some stuff moving. And after a big up day in the equities markets, maybe a little bit of a profit taking and a bit of a reversal day, at least at the outset, as we get still into the middle of earnings season. We'll see how that is driving the futures markets. A couple of quick housekeeping items as we get started. Remember that everything we talk about simply for illustrative and educational purposes only. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options before considering any futures trading or futures products. Remember that futures accounts aren't protected by the SIPC. Also, remember that futures trading is going to require separate trading authorization. We're going to talk a little bit about the idea of futures margin and how it works and some of those concepts in this discussion today. But also remember that there are a lot of different ways that we can evaluate the market, whether it's technical analysis, whether it's probability analysis, whether it's fundamental analysis. We'll talk a little bit about some of those resources here. But remember that all of those are theoretical. None of those are guaranteed in terms of the movement of the market, and Schwab doesn't recommend these technical analysis as a sole means of investment research. Now, we may talk about and have been on the move recently some of the virtual currency derivatives, including Bitcoin and Ethereum futures. If you're going to consider those products, understand that those involve unique and significant risks. Make sure that you are aware of and read the NFA and the CFTC consumer and customer advisories about those products. Understand that they are digital representations of value. They do not represent a legal tender status, at least not yet. And we'll see if that changes in the next few years. But carefully consider whether trading in virtual currency derivatives is appropriate for your portfolio. We don't make those recommendations. We don't make those assessments. Now, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version. It's not a guarantee of future success. Again, it's a good learning environment, but it is a little bit different when it comes to things like studies and those types of things. There are some features that the paper money platform does not embrace the way that a live trading platform would function. Now, the other thing that I want to talk about really quickly as we get started here, and we'll talk about it more as we get into the discussion, is that if we've talked about this before, any order that generates a market order, whether it's a stop limit market, whether it's a buy stop market, whether it's a sell stop market, any order that generates a market order will generally be, based on certain conditions at the time of activation, be substituted for an exchange designated limit order within a protection range or protection bands or protection points. That is to protect not only the exchange, but also the investor against very rapid market movement. So it is something to consider. It also raises the possibility that a triggered order might not fill or might get rejected based on the movement of the market. So something to pay attention to as we put these trades together. It's always a consideration when thinking about putting stops on a futures trade. So we'll jump out here into the Thinkorswim desktop software platform here, specifically the paper money platform, and take a look at what's going on this morning, starting with the Russell 2000. We'll kind of wrap our way back around the indexes here, the index futures. I've got a potential trade setting itself up here on, and I have had a couple of potential trades setting itself up here on the micro version of the Russell 2000 futures. But just in general terms, in terms of that technical analysis, we see that big, strong rally yesterday and a little bit of profit taking today in this futures contract, back down just about to the midpoint of yesterday's move. And so that becomes a concern. If it breaks that midpoint, that maybe indicates a little bit more bearishness. The other thing that we've got going on, despite the fact that we've got roughly equal highs here, is we've generally got a little bit of a divergence going on with RSI. So RSI tailing off a little bit, price kind of sitting flat, if you will, overall. That would suggest maybe a little bit more of a pause, not necessarily a reversal to the downside. Trend is still intact, but it's certainly likely that a big up day like yesterday might result in a little bit of give back or a little bit of profit taking. Same kind of thing going on here on the ES. After a very strong up day in the ES futures, very strong up day in the ES index and its components, now maybe a little bit of a give back. This wasn't really a gap up. This was kind of an even open and then a little bit of a sell-off here. Some profit taking at this level. Sometimes this is referred to as an advance block type of candle, where price kind of runs up into an area where there has been resistance before, where there was a previous high before, and it just can't push its way through. So sometimes referred to as an advance block candle or a deliberation candle, we might call it at this point, where investors are deliberating whether they're going to push higher or lower. That's deliberation is another word for, I think, for indecision or equilibrium, if you will. And RSI kind of sitting flat. And in the NASDAQ futures, seeing maybe a little bit, just a hair more bearishness, but at the same time, a little bit more bullishness in yesterday's trading, taking this right back up to those recent highs in the NASDAQ futures. And I would argue, yeah, you're right, Gary, we're probably also seeing some gold and silver profit taking as well. We'll pop over to the single grid here in just a second and see what is going on in those areas as well. As a matter of fact, let's just do that right now while we're right here, /GC. Again, that kind of bearish engulfing, almost fully bearish engulfing type of candle today. Didn't really gap up. It was an even open, but then it's now pushing down below yesterday's range. In fact, almost to the point where it's engulfing 1, 2, 3 candles of movement and some pretty big candles. RSI slipping below that upper reversal line really for the first time since early October into this run. So does that mean that this is just abject reversal? Not necessarily. Does it mean that there's maybe a little bit of a pullback in store? Perhaps back to a level of support. We'll look at the shorter term. We'll look at the shorter term perspective here on this in just a moment. Let's take a look at /SI in the silver market. And the silver market may be taking a little bit bigger drop at this point. RSI rallying just a little bit and then dropping. We see that this is breaking below those support levels. So well on its way perhaps to becoming a little bit of a head and shoulders type of reversal. If it gets down to this level, right around that 47 mark, that could be perhaps a bit of a head and shoulders reversal. It's nearly there right now on that low, kind of coming back just a little bit. Again, we'll look at this in the shorter term. The other one that I wanted to look at, since we're talking about metals, /HG. Bit of a bearish engulfing, but not as significant a bearish engulfing here in this particular case, because kind of matching side-by-side candles, spinning top candles here at this particular point. RSI falling off just a little bit. The moving average is kind of coming close to convergence, 50 below the 200 in this particular case. So there's that possibility for a pop here in copper. And we'll take a look here at crude oil while we're here. Let's just kind of finish out the perspective of the kind of big futures market drivers that are kind of on the move at the moment this morning. So starting to see that push to the downside and starting to see maybe a little bit of a reversal. This is kind of diverging lines bullish here, where you get this downward shadow or candle, wick on that candle, and then you get an upward shadow or wick on the next candle, those diverging lines, one going down, one going up, indicating perhaps a little bit of of strengthening at this particular level. And again, we've got Fibonacci's on here. It almost retraced that entire Fibonacci move that we looked at from here. So that was June 23rd down here to October 21st. This is retraced almost 100% of that move. So could we see that break to the upside? Yeah, potentially. Could it break below this 55 level? Yes, it could, but perhaps a little bit less likely to do so because we're getting down here in an area where there is pretty solid, again, that's never a guarantee, but pretty solid support, but it's also off of that lower reversal zone on the RSI. So we could see that little bit of a pop to the upside. So let's come back over here to the monitor tab really quickly. I've got a couple of different trades working. One is this one right now. That is that crude oil future, looking for it to come back down and maybe retest at that level of support, that previous level of support. That's already working at the moment. And this one, did I get kicked? No, I'm still in this. So I'm still in this M2K, the E-mini Russell futures, continuing to move in that downward direction. So let's take a look, since we just came off of crude oil, let's take a look at that one first. I'm going to go back to my charts here, and we're going to change this grid to our future movers grid. By the way, this grid, as well as my index grid, or my futures grid, this one right here, I'm going to just do this. I'm going to share this with you. I know it's linked in the description page, but I'm going to pop it. I'm feeling very generous this morning. Not that it's any skin on my nose to share a script with you, but I like sharing scripts. Remember that anytime we share scripts or charts or grids or watch lists or anything like that, those are not recommendations. Those are not guarantees. They're not guaranteed for time or accuracy or anything else. They're simply illustrative and educational examples. I'm going to change this to our futures movers grid, and I will link this grid for you as well. So let's do this. We'll come over here and we'll go share grid so that you've got this one as well. And again, remember, that's not guaranteed for time or accuracy. Yes, I know. It's free to share. Exactly. All right. So here's the one. Let's come back and take a look at crude first, /MCL. This is the micro crude contract. Again, seeing that move to the downside. And let me just do this really quick. We'll pop over to our grid, our 1-year daily chart, so that we can see this tick size. Tick size is 0.01, which means that the significant digit is, in this case right now, the 0.81. The 1 is the significant digit. That's the tick size. That tick value, every time that ticks, that's $1. So every time this point moves from 56 to 55 or 56 to 57, that's a $100 move in the contract price. So contract price times this number gives us our notional value of the contract. That's the leverage in this contract. If you think about what that really kind of means in terms of what our margin might be versus that notional value. How this is accounted for isn't really a measure necessarily of leverage, but if we take a look at the futures drop down and we look at these micro crude oil futures, and we see that we have an initial margin per contract of $578.60, that then translates into the leverage relative to the futures contract notional value, 56.80 in this case, because it just changed. That's that concept of leverage. When we talk about this contract, what it takes to initiate a transaction or initiate a trade, that initial margin relative to the notional value. I hesitate. I know some people use the terminology, the initial margin gives you control of the notional value. And that's kind of a misnomer, because it doesn't give you control of anything other than where you can get into and out of that contract. And even then, that's subject to the market moving and things like circuit breakers and so forth. So, you don't have control of this notional value. You've got that leverage that gives you the ability to trade that performance of that notional value with a smaller initial margin requirement. All right, so here's how I put this trade together on the MCL. I was watching this rallying as we were getting into the early few minutes prior to the market opening. I put this trade on this break. So I've got this labeled entry, stop, target. And the entry point came as that break below the 57.34. And it started to rally up against me and then moved down. It's starting to rally up again, but still looking for maybe a little bit more of that bear flag. So the target down here is not at the absolute low, down near that 56.6. It's attenuated somewhat back at this support level. So looking for this to make that move to the downside. Now, thinking about this just in terms of risk to reward, and without going to the time of calculating this, this is my essential risk in the trade, is that entry to my stop, and this is my potential reward in the trade. So this was about 1.5 to 1. I'm just guessing from that ratio, about 1.5 to 1 in terms of that risk to potential gain in the trade. And I'm okay with that from the standpoint that this is moving in the direction. I was willing to take this amount of risk back up to that level of resistance, in which case I've got a buy stop order there at that point that would buy this back. But we simply went short the micro contract. I've got a buy limit order down here that says buy it at this price or better being lower when we're buying something. And I've got a buy stop order up here to take that trade out if it goes up. So let me kill that annotation because it looks like this might just get us to that target here momentarily if we get this next tick or next candle to the downside. By the way, while we're doing that, I'm just going to quickly remind you, Barb has reminded me a couple of times, and it's out there in the chat a couple of times, that there is a feedback survey out in the chat. Now, we don't ask a lot. We ask you to subscribe to our Trader Talks webcast channel. We ask you to follow us on X. And we ask you to do us a favor and help us to make these sessions better by taking just a moment filling out that feedback survey. It really is 2 questions, which is 2 numbers, and then an open field for you to put your comments in. And as of course, you know, as Barb, I know Barb says, 1 is you hated it, you never want to come back. 10 is you loved it, and you're going to come back. That's kind of the spectrum on which that survey operates. So we would love to have you fill out that survey. Let us know what you think. And it looks like we're getting down to that point potentially here where this might fill. It's moved through it. Now, again, remember, this is going to be a limit order. The order that we have to take this trade off in this particular case, if I come back over here to my gears and I go show orders, and there it goes, that next candle moved to the downside. Now, may it continue to move to the downside? Yeah. Do I care at this point? No. I got into the trade and I got out of the trade at that point where it did what I expected it to do. And I had set that trade up specifically given the fact that we saw momentum moving to the downside, and I saw breaking potentially this level of support, setting up this double top type of pattern, breaking to the downside. And it did exactly what it was supposed to do in this particular case, was make that move to the downside. Is it likely to go further? Perhaps. It's below this previous level of support here, if we draw that line over here. And if we look at the larger chart, you can see where this is. Let's kind of zoom back in here. You can see that we're still coming right back off of that low back here. If we zoom back over here and we look left to confirm right, it's got a ways to go. I mean, it can come back down to that 55.12 before it really runs into these price discovery lows back here. Is there likely to be more downside? That's a good question. If it were to break that 55.23 and RSI were pushing to the downside, CCI was pushing to the downside, that might potentially be, for some traders, again, another entry signal because it's breaking below some significant levels of support. So we are now out of this trade. It did what we expected it to do. So that trade has now closed down for us. And we made about $60, about $70 on that trade. Now, that doesn't seem like a lot, right? But that is again, the kind of the nature of this type of shorter term. This isn't scalping. We're not trying to pick off candle moves. This isn't. This is really more intraday swing trading, swinging from a level of support to a level of resistance, or vice versa, which is exactly what we did in this particular case. And so, in the futures market, we're not scalping. And I know there are some futures traders out there that scalp, 1 minute candles, and you get a little bit of a move and you take that trade off. This is setting up just like we do, and just like Barb does, and just like Scott Thompson does in equities, setting up a potential measured move, looking at getting into the trade when it gives us an entry signal, getting out of the trade, either when it goes to our target or when it comes to our stop and we get kicked out of the trade if it's going against us. And so that's kind of the approach to placing this trade. Now, what I want to say is this. If we go back to these charts, and we talked a little bit about this the last time that I taught this webcast, was how do you translate that into kind of that longer term or intermediate term perspective? If you're not desiring to look at 1 minute candles or 5 minute candles, and you want to take a little bit slower perspective, can you with futures trading? And the answer is absolutely. And simply apply the things that we talked about, apply those concepts here that we were looking at to that longer term chart, and making those decisions, those entry and exit decisions the same way. And I think Stay Gold has a good point here. If this is making that short term break of that support level, we might be back down here on this longer term chart looking for that longer term potential reversal on that bounce. So if we think about that, what are we then potentially looking for in terms of that bounce? Would be something like a close above the high of the low day, a break of a diagonal trend line, whatever that catalyst is, whatever that evidence is that might give us an indication that price is moving higher again, but waiting for confirmation. Because I don't know if this is going to be the low. I don't know if this is the absolute low for crude at this point. We won't know that until it's in the rearview mirror. So that's the nature of using things like a hold or close above the high of the low day perspective, or a close below the low of the high day is the other way to look at that, or a break of a diagonal trend line, all of those things. So let's look at the next one that we were looking at, and that's, so let's go back. Whoops, I want to just restore my cells here. I don't want to change grids. I'm just going to restore the cells so that I've got these two side by side. And the other one was /M2K, which was the micro to the Russell 2000. And I didn't quite label these, but you can see what the perspective is here. So again, let me label these really quickly. And this is, if you are just getting started doing this, this might be a helpful method to label your stop and your entry and your, in this case, target. My target is down here. And again, this is a defined entry and exit trade. I'm not trading the trend. So the white writing on the chart, those letters right there are exactly what I just drew right here. And I used this drawing tool, the text note right here, to put those on the chart. You can do that too. That is a tool that is native to the Thinkorswim desktop software platform. You can leave those text notes. Now, those text notes are going to show up on your mobile device. They're going to show up on your web-based platform as well. They're going to be persistent on the chart just like any other drawing tool. And so they give you that ability to kind of put those notes in there and see what is going on. So the way that I structured this particular trade, again, if we go back to this grid and maximize that sell, was this line right here is the midpoint. And I'll just kind of come in here. That's just below the midpoint of that big green candle yesterday. Why is that important? The midpoints of big, long candles, big momentum candles, and it doesn't even have to be that big, just a candle that's driven by momentum. Those midpoints tend to act as levels of support and resistance. So if this is a level of support, that's a new level of support down here. I want to see price move down to that level. And it did in this particular case. Yeah. So Ram says, what did I see on the daily chart, on that longer term chart, to go look for the move on the 5-minute chart? One is I've got these side by side. So when I'm looking at what's going on over here on the daily chart, then I'm also seeing what's happening over here on the right-hand side in that 5-day 5-minute chart, or that today 5-minute chart. So I'm seeing that movement taking place. The other thing I was looking at is exactly what we were looking at on that first chart that we looked at this morning, which was, let me clear this drawing set really quick. And so we can do this. So we should get a fill here momentarily. If that goes through that level, theoretically, that should fill and take us out of that trade, because that's where our stop order is in place, or our target order is in place. If it's not, then I put the order in incorrectly. So I'm just going to do this. We're going to create a new drawing set. Let's do this. Create a new drawing set. We'll call this clean, just so you can see this. So what I did is I came in and I looked at this candle, and I saw that this was downward movement from yesterday's big up candle. And I said, hey, you know what? This is a potential profit-taking candle. We're seeing some of that profit-taking. So I'm going to look for some kind of downward trigger, and that's what we had. We had that little bit of a rally up, and then a pullback to the support level. So I saw that support level materializing here. I just drew this discretionarily where that support level was, and I set the trade up. It came off of that level once, twice, and so I set that order up to get in if this broke down, if price broke down below that support level. Rallied back up into it, which is fine. I had my stop up here, and I have my target down here. Now, this isn't filling and getting me out of the trade, which makes me concerned that I put the order in incorrectly, which I very likely did in this particular case, because I was trying to hustle and do this. And again, guys, there's a saying in aviation, and I've been around aviation most of my life, from the time that I was about 15 years old. I was working at a small airport near my house, fueling airplanes and stuff, and so I've been around airplanes for a long time. And the saying is this: slow is smooth, smooth is fast. Sometimes we push that and we try to rush, and then we get discombobulated about the trade, and then we end up making a mistake that takes time, more time away from what we're doing, because then we got to come back and fix it, which is exactly, I think, what has happened here. So what I want to do is I want to go back to the monitor tab, and I want to take a look at my working orders, and I do not have any working orders here. So here's the thing. We've got this short position, and we entered this trade. We've got 2 contracts short, but I don't have any stop orders on this. I don't have those stop orders on this trade at the moment. So number one, it's doing what we wanted it to do. It's down below that level. So I want to look at taking this trade off, because I don't want to give anything back. It did what it was expected to do. So we're just going to close that order down. But what I had initially put on, or what I had thought I had initially put on, and I don't know why it went away, what I had thought that I had put on was a stop order up here, which should still be in place, and a buy order. So this would have been a buy stop order up here, and this would have been a buy limit order down here to get us out of the trade. If it went down, get us out of the trade. If it went up, get us out of the trade. And for some reason, that order is not there. So I did something wrong trying to rush. So I'm going to just, it doesn't do you any good. It doesn't do me any good if I show you perfection every single time, because that's not what you're going to get. You're not going to trade that way. Nobody trades perfectly every time. So I acknowledge 100% that I make mistakes in the way that I trade sometimes, and so do you. And that's human nature. So if we can learn from that, great. And so hopefully this has been, this is helpful. Well, Barb maybe doesn't make mistakes. No, I know Barb does make mistakes because she acknowledges it too, and she'll use it as a learning example as well. So we're going to take this trade off. In fact, you know what I'm going to do is I'm going to put another limit order back down here, buy limit order to buy these back. So if this does go down, here's the risk that we run is that this does exactly what I'm talking about right here and starts rallying back up off of that level. And then that order doesn't get filled. So I'm going to do 1 and 1 because I've got 2 contracts here. I'm going to buy one back right now and book a little bit of that profit. And I'm going to put a buy limit order on this that says buy it back at this price or better. And when you're buying something, or better is less. So let's do the first one first. So I'm going to come back over here to the monitor tab. I want to just measure where that is. 24, we're going to call that 2480. I'll call that 2487. So we're going to go to the monitor tab, and I'm going to come over here to my trade, and I'm going to right click, and I'm going to create a closing order, and I'm going to sell this. But what I need to do is I need to change the number of contracts to 1. Wait, so why am I long here? Wait a second. Something's not adding up. Maybe I did something really wrong. Oh, you know what I did that was really wrong? I'm long in these contracts. And gosh, you know what? That's exactly what I did not want to be. I wanted to be short these contracts. So I'm wondering why I'm ending up being long in these contracts in this particular case. If I just completely added, let's see what order it was that filled. Let's come back over here. Where's our M2K? There it is right there. There's my open contract, 2502. So that was the filled order. It sold it. That's really interesting. So I ended up selling it to begin with, and then I closed it, and then I closed it again, and then I opened it again. Yeah, you're exactly right. And so that is something I double executed. Okay, so let's do this. We are long in these contracts now. So I'm going to come back over here to that charts grid and say, look, now I'm rooting for this to go back up because I'm long these contracts. I'm going to peel back one of these contracts because it's not doing what I expected it to do. And in fact, I let it continue to go down to the downside. Now I'm hoping in this particular case, and that's never a good place to be, is hoping that something moves in a particular direction. I want to be a little bit more certain about that. But I'm going to go back to the monitor tab. I'm going to take one of these off. Since I'm long that contract, I'm going to just come over here and I'm going to right click and we're going to create a closing order. So we're going to sell one of these and just peel that off so that we just don't have that much exposure here. And I'm going to go ahead and confirm and send. Click on this, and we're going to put that back in our futures group. And we'll hit that order to fire that off, and we'll see if that order will fill. Now, that was a limit order because we created it at that limit order. We may need to work that a little bit because that's now starting to move back to the upside and kind of hanging out there. So we've got 24.89.50 limit, and this is kind of, there it goes. So that filled for us. And notice that it filled at a slightly different price, right? Yeah, it could be, Carol. So I still want to kind of peel that back. I'm going to leave this one in place. So let's do this. Let's go back to that chart and let's kind of flip this order over. And let's use this. I think this is a good learning experience. Hopefully this is for you because it is for me. Let's make this our target. And let's make this, since we're already in this and it's below our entry price, let's make this our stop level, 2487. So we'll just make that our stop in this particular case. So what I'm going to do is I'm going to create this as an exit order to get out of these positions. So we're going to go back to the monitor tab. I've got this one contract left that we're long, and we're going to look for this to go to the upside. We're going to take it off if it goes down. So I'm going to right click, and we're going to create a closing order, which is essentially with an OCO bracket. So we're already in the position. So I'm creating an OCO bracket order here. So I want to sell this back at a limit order, sell limit. When we have a sell limit, That sell limit says sell it at this price or better is higher. So our sell limit, if we go back to our chart really quick here, is going to be up here at 25. We'll call it 2504. And our stop, let's kind of bring this up so that we can see it. 2504 is going to be our sell limit, which says sell it at that price or better. So 2504. And we'll make that good till canceled, because if it can run for a little bit, great. If it runs up to that upside, cool. And 2487, we'll call 2487 our stop. And remember, this is going to be stop market. 2487 is going to trigger that stop market. And I'm going to make that good till canceled as well. So now I've got a bracket order on here. And I've got that order down here that will kick this out if it continues to go any lower. I want to be able to get out of this trade if it goes lower. It'll also kick it out if it goes up here to this price, just simply because I want it to retrace and get out in that move. So I'm putting this order together. So let's do this. I'm going to go to confirm and send. I'm going to make sure that these are closing orders. And I'll tell you the big thing that I did not do is I did not read the order when I placed the order. So this is a good reminder to read the freaking order. So we're going to sell one contract at 2504 limit if it goes up, or we're going to sell one contract at 2487 at a market stop. Now remember, that's going to be substituted by an exchange designated limit order. So there's the potential, if that market gets moving to the downside, that could not fill. But again, that's to close, so I'm making sure that that's to close. I'm aware of the transaction costs here. I'm going to put it in my futures group. We're going to click on send, and we're going to fire that order off. And now that order, and again, you're right. So who said that this, if we put the order in place, we'll see that confirmation? You're absolutely right. You know, that is certainly something that is a good double check, if you will, is going to this gear icon and clicking on show orders. Now, I don't do it all the time because it kind of adds a lot of noise here to the chart, which is fine. There's nothing wrong with that. It's just I like to unclutter the chart when I'm demonstrating various techniques. So doing that, putting those orders on here and seeing those visually on the chart is a good confirmation of the order being in place to do what you expect it to do. So we're starting to see that move back to the upside here. In this particular case, we've got our orders in place, so we're going to let that one go and see what that does. I wanted to look at a couple of others here, /BTC. Again, remember, when we talk about the cryptocurrency derivatives like this, remember that there are special risks. These are behaving differently. These have unique and special risks. These are not, in fact, legal tender. They are digital digital storehouses of value, theoretically. But what I'm noticing here, and have been, and I've talked about this a couple of times in other webcasts, is Bitcoin /BTC is kind of giving us this wide expansion pattern. From a technical analysis perspective, that wide expansion pattern oftentimes tends to be an exhaustion pattern. And it tends to be a bearish reversal pattern when it comes at the top of an uptrend, because the bulls get exhausted trying to push this price up every time. It's much like a head and shoulders pattern in the sense that it is an exhaustion pattern. That's what a head and shoulders pattern is. Price gets pushed up, gets pulled back down, price gets pushed up again. That exhausts that bullish pressure, comes back down, there's a last gasp, and then it breaks down below that level of support. So this is very similar to that, this expansion pattern like this. And it's quite possible that we see another move back up to this midpoint of this expansion pattern before failure. It hasn't failed yet, but this is a technical pattern that oftentimes results, especially if it's at the top of an uptrend, in a failure right here at the midpoint and then a move back down to the downside. Okay. So PBG asks a great question. So if you've initiated an order and it fails or doesn't fill because of that protection points and it's going against you, then you put in another order. You can adjust that order, you put in another order, and you accommodate those risks, which is also the reason why we talk about the idea of trading to appropriate position sizes. And this is a good example, and I'm glad that you brought this up. Because when we talk about position sizes, what determines our position size in a futures trade is that initial margin and then the maintenance margin for the trade once we're in the trade. So if I come over here and I open this site up, we'll go maximize sell. Look at the notional value of this particular contract. This is the full-size Bitcoin contract. Look at the notional value, $547,700. That's the notional value. Our tick size is 5, which means that this number right here is our significant digit. That's going to move from 0 to 5 to 0. That tick value is 25. The point value is $5. So that's going to give us that notional value. Point value times this number gives us our notional value of the contract. So if I come to my drop down and I go to that futures drop down and I look at forward slash BTC, look at what my initial margin, let's come back here and let's kind of squeeze this over so that you can see it. What's my initial margin? $146,619 is my initial margin into a trade on the big contract. So when we talk about position size, that's a big position size. So let's change that contract to forward slash MBT, which is the micro Bitcoin futures. Now the notional value is $10,995. It's moving the same way, but we look at our initial margin into the micro Bitcoin futures, and this in fact has gone up a little bit. Remember that that margins can and do change based on market conditions, based on either the exchange or the brokerage, can adjust those initial margins. This initial margin has in fact gone up a little bit from what it was, but that initial margin is $2,937, which is a lot less than $149,000 of initial margin into the trade. So let's pop back over here, and it's just broken this level of support. Let me grab my drawing tool because I'm still on the text line here. I'm going to grab that tool there. And so that might be our line in the sand in which we look at getting into the trade and then looking for a potential previous area of resistance to take that trade off. If we zoom back out, or we go over to the other chart here. So here's our level of support. It's starting to come back up into the range of that candle. So we might look for a resistance area to take a short-term trade off somewhere in this range, or we might look for a longer-term reversal if we were a little more bullish on this to come back up to that resistance level right there, still within the context of this kind of expansion pattern that's going on here on these Bitcoin futures. So if you're a short-term or an intermediate-term trader, you can use a couple of those different ways to do that. We're going to come over here. There's our short-term trade. If we were going to go long, we might set that as our stop. And I'll just put this in. I'm not going to put the trade in, but I'm just going to put this in. That's the target. That might be our entry. And then we might use some area down here as our stop as a level of support. So that might be how we would put this trade together. Now, right now, stay gold. There is MET forward slash MET, micro ether, but not yet tradable futures on some of the other coins and stable coins. All right. So let's do this. I know we've got a lot of stuff. Housekeeping wise, we got that survey out there in the chat. Give us a follow on X at Ben Watson CS, at Barb Armstrong CS. Also, if you want to learn more about this, come over here to our Trader Talks webcast channel. Make sure you give us a follow here by clicking on that subscribe button. But if you type in futures right here, and you're going to see all of the futures playlists and the discussion of futures right here in this discussion. And then you can follow us also. For those of you that like to travel, we're going to be in Miami in December, and we're going to be doing the Advanced Options Strategies Workshop. We're doing a virtual workshop right now, but the benefit of coming to the live one is we do a quarter of a day session on Introduction to Futures, in this Advanced Option Strategies workshop. So we'd love to have you there joining us for that. As a matter of fact, I think Barb's going to be there for that one as well. But we'd love to have you come to that one. That's at no cost to you. All of these in-person events are at no cost to you, and we do things like buy you lunch and breakfast and all of those great things. So once again, let's pop back over here. Let's see how that's going. My thanks to Barb Armstrong for helping out today. My thanks to all of you for joining me for this discussion and for the opportunity to take something that was a mistake and turn it into a teaching moment. And I hope that you'll join me again. Coming up is James Boyd talking about the Investing Master Series at the top of the hour. So we will see you guys back here for that. Take care. Have a great day. We'll see you again soon. Bye-bye.